clients?
Well, basically, I write financial newsletters. I'm about to launch a self-published financial newsletter. I also advise companies, startup companies, especially in the high-tech arena, that want to raise capital, and I help them not only raise capital, but also with their business plan and then with the execution of that business plan in order to achieve their objectives.
Now, I actually did some research on you, and your track record is somewhat impressive, especially Brazil and other places. Could you go over the mechanics? How do you get the devil in the details and make your recommendations?
Well, basically, we become a global economy, and if you look at the pioneers in investing in emerging economies, people like Mark Mobius, they spend 50% of their time in analyzing the macroeconomics of a country. And then once they decide what's happening in that country and they see what industries are working, then they go specifically into the companies. And they do a great job at analyzing the companies bottom up. So I add a few more layers to that analysis. But basically, I first start with a global economy. Then I decide which of the countries is going to accelerate more, and then I focus on those economies that are going to show the most improvement in the next 6 months to a year, and then within those countries I focus on the industries, and then I go down to the companies. Once I get down to the companies, I do an exhaustive analysis of the companies, which is basically what the bottom-up people do. Some people just do bottom-up analysis and forget about the macro. For me, I find that as a big flaw, especially if you're in emerging markets, because in emerging markets, the macroeconomic picture has a tremendous incidence on the performance of companies. And then once I'm done with that, I have a whole bunch of companies that have gone through all those filters, and once I have that list of companies, then I do a relative value analysis to see which one of those companies is cheap in reference to the fundamentals of that company, and also in comparison to their peers in that country and in other countries. And finally, when I'm done with all of that, I do technical analysis.
What's technical now?
Technical analysis is basically an analysis of trends, of trading volume, and many other indicators that are not related to the fundamentals of a company, but more related to the stock and the way it trades.
Gotcha. Are there factors that distinguish the Latin American economy from the North American economy?
Yes. Basically, right now we're in a situation that's unique, that I had not seen in decades, which is the advanced economies, that is Japan, the US, and the European zone, are growing very, very slow. And they are in trouble because they have reached a threshold of indebtedness, either at the country level or at the corporate level or at the individual level, in some cases a combination of those. So they have too much debt and they need to get out of that debt, basically. So that debt is weighing on their ability to grow.
It's like a boulder on their shoulder, slowing them down.
That's exactly right. It's like carrying a big 100-pound backpack.
Gotcha.
It doesn't allow you to run very, very fast. But the emerging economies have very little debt, and they actually, because during the last 30 years they've gone through a lot of financial stress, these guys have gotten themselves in shape. In
Brazil.
Brazil, well, the BRICS, Brazil, Russia, India, China. They have typically fiscal surpluses, that is, they collect more tax revenues than they spend, and they have trade surpluses. They export more than they import. Therefore, they are in a position of strength, and because of that, they are growing like gangbusters. So you have a global economy that's a two-speed situation, where you have the advanced economies growing very slowly and having hard problems, and you have the emerging economies that are growing at, in some cases, double-digit rates of growth. It's fascinating.
Sometimes we hear about Latin American objections to, American policy, foreign policy, but this isn't, that's more of a country by country issue.
Yes.
It doesn't seem, and you're dealing with individual companies. But how might, American foreign policy stances affect your perspectives?
Well, it does a lot. Basically, every political decision, be it an international policy or in domestic policy, has economic ramifications. So the analysis of American foreign policy and the responses to that American foreign policy by other nations is very important in the analysis that you do. Because if you have a country that is friendly to the rest of the global economy, that country tends to do and open in general to free trade. For example, Chile. Chile is a very open economy and very open to free markets. That economy tends to do, over the long run, a lot better than economies that are closed to foreign trade.